right, hello and welcome everybody to the Anglin podcast. I'm going to tackle some tax topics today. My name is Chris Cook. I'm a partner with the firm here in our Huntsville office. I work in the tax department and specialize in credits and incentives as well.
Yeah, my name is Jarot Scarbrough. I'm a manager in our Pensacola office. I work with Chris on credits and incentives. And today we're going to talk about the employer retention tax credit.
So to get it started, let's talk about how big of a deal is this credit? Jarot, can you talk about just how valuable is this to taxpayers?
So the ERTC credit can be very, very lucrative to clients. It is, through all the COVID legislation, I would say it's one of the most valuable credits if you qualify. A max credit per employer is $26,000 per employee. If you have multiple employees, that can add up quick. And when it initially came out, not very many people took advantage of it because it was limited. It was only for a year. It didn't become as valuable until later legislations. Then in December 2020, they made changes to it through the Consolidated Appropriation Act. They say now if you took PPP, you can also take the credit. So this was a game changer. This is when most of our clients started really looking at this credit because like I said, most of them had taken PPP, but now they're also eligible for the ERTC as well. And one of the two big changes besides the PPP change in the Consolidated Appropriations Act is it was extended through Q2 of 2021. And also, when they extended through 21, they changed how you calculate the credit for the 2021 tax year. Instead of being limited to $5,000 for a whole year, now in 21 you're able to get $7,000 per quarter per employee, which is a huge change. And they also changed the large employer from 100 average FTEs to 500. Which was also another big deal. And then in March of 21, the credit was changed again through the American Rescue Plan. And through this legislation, it was extended through the end of 2021. It stayed the same on how to calculate the credit for 21. It was still $7,000 per employee per quarter. But they also introduced the recovery startup business, and this is for businesses that started during the pandemic, and we'll go into further detail later on. But this has also been great for clients that have just started their business. And then lastly, the last change through legislation was through the Infrastructure Investment and Jobs Act in November 2021. And this one, they eliminated the Q4 2021 credit, except for the recovery startup business. And then for not recovery startup business eligible taxpayers, it was you could only go through Q3 2021.
Yeah, so a lot of movement there, Jarot, but I think, to summarize, it took a few steps to get there, but at the end of the day, the employee retention credit was part of COVID relief, and where we ended up is the quarters we look at for this credit are Q1 of 2020 through Q3 of 2021. Big picture, there are two ways to calculate, to be eligible to claim this credit. You either have to show a revenue decline from the quarter in question to a base period, or for the quarter in question, you have to have been fully or partially shut down as a result of a governmental order. So let's start with the revenue decline criteria. If you are claiming a credit for a quarter in 2020, you look at that quarter, that calendar quarter, and compare to the same quarter in 2019. So I look at the second quarter of 2020 and I look at the second quarter of 2019. And if my top line gross revenue declined year over year by 50%, then I have satisfied the revenue decline criteria and I have a qualifying quarter to claim the employee retention tax credit. Now in 2021, that threshold for decline decreased dramatically and opened the credit up for a lot more people. So for a 2021 quarter, in the same scenario, if I look at the second quarter of 2021, I still compare back to 2019 as my base period, but my revenue decline only had to be 20%. So as a result of this kind of decreased threshold for revenue decline, a lot more people are eligible to claim the credit under 2021 rules than under 2020. The second way to be eligible to claim this credit is if you had a government shutdown. If your business was partially or fully impacted by a government order. So to be fully or partially shut down, you need to be able to tie that shutdown to a direct order from either the federal, state, or local municipal government. So if you had a stay-at-home order from the governor, then that would be you would have an eligible quarter for as long as that order was in place. If you had if you were not deemed essential and you were not allowed to come in, then that would be an impact for an employer, and you could maybe be eligible for that quarter. Now, what's a little even more vague is, what does a partial shutdown mean? So maybe some of my business got to continue on normal operations, but some of it didn't. There's a safe harbor in place there where if the portion of your business that was shut down as a direct result of a governmental order represented 10% of the overall business enterprise, then that would be enough to say, yes, we were partially impacted by the governmental order. What is not covered by the government mandate is, I think some of the things we've seen there is, CDC released guidance, OSHA released guidance about capacity in business and enclosed spaces and things like that. Unless your governor, mayor, president, whoever that governmental order came out and made that guidance into a law or made it into a mandate for that time period, that's not going to be enough to meet that threshold of a government shutdown. So if you're going into making an employee retention credit claim and you're relying on the government shutdown criteria, you want to make sure you're very buttoned up and you can tie it back to the direct mandate that came from whatever governing body issued the order. Jarot, you want to talk about what it takes to actually claim the credit?
So the ERTC is a payroll credit. That means that the refund, the money that you're getting is actually coming from the payroll taxes that you paid, or at least a portion of it. So what that means is, in order to claim the credit, we have to go back and amend your quarterly payroll tax returns. It's typically Form 941. And so we go back and amend those, and we would get a refundable, non-refundable portion. It's the way the IRS divvies them up, but it's kind of misleading. You still get the full refund, the full amount of the credit. But one thing to think about is the impact that it has on the corporate income tax. So the IRS has came out and said that any amount of the credit you're not allowed to deduct on your corporate tax return. So what does that mean? That is, let's say you have a $100,000 credit on your tax return. You had an expense of $200,000 worth of wages. So we would actually have to go in and amend the tax return and take out that $100,000 credit from your wages. So what does this mean? This means that it will result in a higher income tax, typically. And it goes for the same for C corporations and also flow-through entities. But the flow-through entities, we would need to amend the entity itself, and then we would also need to amend the personal income that the K-1 goes to. And it typically, and then this depends on the size of the credit. Typically, the credit is more lucrative than the additional income tax you're going to have to pay. So it's typically a greater benefit to claim the credit.
Yeah, I think the way to think about that is, the credit is a dollar for dollar reduction of your tax bill. The deduction that you were getting previously, it's only going to be the tax effect of whatever that number was. That's going to be the dollar impact. So the credit's going to be more valuable than the deduction in this scenario, but as Jarot mentioned, the IRS is not going to let you have both. You can't have the credit and the deduction. The logic there is they're saying we're subsidizing those wages, so we're not going to let you deduct them because we're paying for those with the credit. So that's pretty consistent with other credits and incentives that we see. So no surprises there, except for the timing of it, because you may be in a situation where you're amending your income tax return, going ahead and having to pay additional income tax potentially before you've received the refund money on the employee retention credit claim. So that's just something to be aware of when you're kind of entering into this process.
They're not going to start processing these again until the beginning of 2024. So we really, at this point, we're really unsure about how long the refunds will take for anything filed, past the September 16th deadline when the pause started.
Yeah, I think that's right. I will say there have been varying timeframes for different people about when the refund checks have gotten in, but the money does come for the ones that we've claimed. And as we've kind of talked about the qualifying criteria, this does not apply for everybody. This is something that you need to look on based on the facts and circumstances of your own situation, and don't listen to someone who's telling you everybody's eligible for it, because that's certainly not the spirit of the law. That's not the way the IRS is interpreting it, and you should be prepared to defend any claim that you make. Just as an example of that, the IRS has extended the audit window for this particular topic based on, traditionally the IRS has 3 years to go back and pick one of your returns for examination. Well, as a result of this credit, that window is expanded to 5 years. They're already saying we're going to take more time. We're going to be looking at these. And then they've also come out with notices saying we believe that a large fraction of the credits that are being claimed right now are fraudulent or aggressive, and we're going to be taking action. And so if you've made a claim that's not going to hold up, what you're going to be prepared for is to have to pay back the refund that you received along with penalties and interest. So not a situation you want to be in. You want to look at these carefully before you make the claim. Kind of along with that, the IRS has released additional guidance that says if you have made a claim right now based on maybe aggressive marketing or just misunderstanding of who's eligible, there are steps in place right now you can make to withdraw a claim that you've already made. So if you've already sent a claim, you're waiting to get that refund, but it hasn't come yet, and now you're kind of learning additional information. You're saying, oh, this actually doesn't apply to me. I thought it did based on what I was told. You can go through steps to withdraw that claim, kind of take yourself out of the situation where you're going to have to go through an examination, penalties and interest, and all that. And so there are steps, and it changes. Those steps are different depending on if you filed it based like on a 941 for a single employer, or if you use a payroll provider or something like that. So you'll need to, again, look at the facts and circumstances of the claim you made to determine how the withdrawal process will work, if that's something you're interested in. I guess just kind of final thoughts here. High level, I would say this is one of the most valuable tax credits that we've seen. It's very very valuable and important for taxpayers who are eligible. And if you are eligible, you should claim it. It's totally worth it, and there's big numbers there. But you need to have your eyes open that there is strict qualifying criteria, and not everybody is eligible. And there are, unfortunately, some people out there who want to sell you that everybody can claim it, and we just don't agree with that. We think that's aggressive and kind of a dangerous position to take, and that has been kind of backed up by the posture that the IRS has had recently. If you'd like to schedule a one-on-one with us to kind of dig through this a little deeper, happy to do that at any time. And we can kind of hold your hand through every stage of the process, between understanding the rules, making the calculation, documenting and substantiating the claim, and ultimately filing the claim and all the income tax impacts that goes along with that. So with that, I'd just like to say thank you for listening. If you've made it this far, congratulations, and look forward to talking to you again soon.